So hey guys, welcome back to another video. In this video, I'm going to break down my complete swing trading forex strategy, and I'm going to give a breakdown on how you can trade the same way, and how I use fundamentals and technicals to get in my entries. And again, I prefer swing trading over day trading because uh, I have to put in less time on the charts, and I cannot really integrate fundamentals when I'm day trading. So, which is why I prefer swing trading mode. So let's keep the skill, and I'm going to give a breakout. So every time you look at a chart, you have to understand the importance of multi-time frame analysis. You just looking at the per hour isn't going to give you you know, let's say a direction of 2 weeks, because again we are trying to steal the overall trend. Now every trend goes this way. So you see this. And what most of us do is, when we don't do the multi-time frame analysis, we kind of get stuck trading this move. Now, okay, there is nothing wrong in trading this move, it's just that it's a lower probability play. You are better off if you are trying to catch a move like this, because you are in the overall higher time frame. Which is why I look at the daily time frame and then I take my entry with the 4 hour time frame. So same way, let's see the daily. You see that the daily is swing bearish. So we are creating lower lows. So to here we are bullish. So we creating higher highs. Then when we broke this low, we turned bearish. So this is going to be my protected high. I do not. This is going to be my protected high. I do not want to see the price go above this. If it was above this again, price has turned bullish, and then I can start looking for longs from there again. So what do we see? This is so from this high to this low is my bearish range. So I'm going to draw an equilibrium from here to here to see if we are in an area of union or we are in discount. So anything above the 50% is considered as area of premium, so which is good for the kinker shots. What do I see? When we tap the equilibrium, there is an area of supply present here. But how do I know if this area of supply is valid or not? So this area of supply has an imbalance candle. So when an area of supply has an imbalance candle, I generally consider it valid, given that I have my other consequences lining up. Then again, now we understood that, okay, we are bearish day friend. So looking for shorts looks like the best move right now. Then we come on the Pura time frame. So I took this trade yesterday in yesterday's New York session, and just to give you an actual quick at actually took it, and will share you the screenshot of the running trade from the broker. Yeah, this is the running trade, and I've taken this on one of my top accounts. So yeah, this is from there, and I have again proved that I actually took it. This is my entry, and this is where it is 9:30. So again, let's go in the breakdown. So on the Pura time frame, we see, oh no, we are just getting down. So we tried. So what we saw on the day time frame, we'll try to copy the same thing on the lower time frame, basically looking for an overall structure. So what do you see here? You see that even the 4 hour is swing bearish. And then we have again the top area of supply here. Again, we have multiple areas of supply, but again, you cannot short at every supply chain. You need to know how to differentiate between the A plus supplies and again another supply group. So how we differentiate that? This is liquidity. Some people call it remain liquidity. Some people call it, high liquidity. Like a high liquidity, descending high liquidity, something like that. But what you have to understand is it is liquidity at the end of the day. When all this liquidity is taken out, price comes to the top area supply. Now, how do we know that price is valid to go down from here? Again, same thing. What we did in the higher time frame, we'll do on the lower time frame. Now, this is a minor uptrend. If you can see, this is a minor uptrend, right? price is making higher highs, right? And also another way of in that can be by seeing if the areas of demand are being respected. If I do an area of demand here, and then we try doing this game up here. See, this is we also put an order flow, saying that this order flow is bullish. Okay, so can so that this is a belief out on this point a bit as they can getting kind of messy. Yeah, okay. Everything held in the bow. Now the ideal trade should be when this flow is broken. So that is when this bullish order to gets validated. Because now this was the demand. This was the demand that pushed the price up higher. And prices again replaced to an area demand. So again, now I have been trading this strategy for a long time, so I know how to differentiate if a demand is going to fade or not. And generally, what happens is price breaks this. Sometimes prices the place is secure. No, this recess this area which will aid the demand before and continues down. So when something like this happens, my risk to reward is affected. Like again, if I enter somewhere here and I keep my castle about this high, again I'm just able to pull out a 1:1, not an IP scenario obviously. But when I try to take trades of an area of square like this, my win rate has maybe reduced by 10%, but I'm able to capture with RRs. So here this I'm looking at a 3.5 hour trade. So yeah, at PA that is the entire strategy to basically where you do the same thing on multiple time frames. You go on the daily time frame. You try to find out the range if the price is bullish or bearish. So then you have your bias that I want to make the shorts. And then you come down to the 4 hour time frame, and then there again you mark out your stop. Then you see okay there is a 4 hour overall swing, overall swing trend, and then in this swing trend you can look for areas of supplies, and then on the confirmation I just thought you, which is every time you pull back you are forming a low time frame uptrend. So the invalidation of the uptrend, you can look for your shorts. Now in the next video, I'll actually explain you on how do I enter this. No, on how do I take positions and expect if an area of demand is going to fail or not. I do not know. I could explain you right now, but it could be too much for the grasp. So this is it. We'll see how this trade runs out. Present. This is like an A plus setup. When it's on pitch share, don't play out. If it doesn't, again, part of the game, you take a loss on the one. Now the similar setup actually happened on Bitcoin. So I was seeing the Twitter space. Everybody is bullish on Bitcoin. But again, this strategy worked very well. You could even do this on 15 minutes. I don't prefer doing it because first is time restriction. I have some other stuff which I have to do. So I cannot look at the charts 5-6 hours a day, and this hardly takes me 1 hour. So which is why I prefer spin trading. But the same thing actually happened on Bitcoin. And I'm also in this trade right now. I've just marked everything out so I can show you. Delete it. Okay. What do you see here? In the daily time frame, you see there's an area of supply. I have actually with the drawings, so yeah. We have sees the daily structure bearish. So looking for sells is the most appropriate and not the best move on the table right now. I see an area of supply. I again go down to my 4 hour pattern. What do I see? This 4 hour time frame is actually the same thing which you saw on GBP card. It is an up move. Then how do I know, is it a valid business or not? Same thing. I wait for an area of supply, area of demand to get invalidated. This was only my area of demand because this historically lower time frame bullish order flow last structure. A correction area of demand. I draw my equilibrium and I set my limit orders on my equilibrium. Again, this was when high here, so I needed this put ideally pale. So I kept my entry about this, and then I looked to. I'm still in this position, obviously. But now, even if you were trying to trade it using the strategy which I just told you, where you're waiting for the structure to change, your entries are valid. So let's see if you're lucky and it traces to this imbalance, you put again laser entry, something like this. Same entry and target lower or this if you're lucky. So that's it. This is a simple breakdown of my strategy. And again, the main part which I forgot to tell is the whole fundamentals. Now, my daily is bearish, my 4 hour is bearish, all that is back. But what is actually going to give me the confirmation if I'm talking about? Now, what you see, these charts are just footprints of, of the overall fundamentals. So there was a speech yesterday where Trump told that he would get in the world and he would try to finish it soon, but he would bomb Iran heavily. So what this does is, this pushes oil up. So as you can see, this is the US oil chart. It has been valuing up. Now if you have a little bit idea of fundamentals, you know that US oil is completely correlated to the Canadian dollar. So when US oil goes up, Canadian dollar goes up. So all the pairs like CAD, I can exit because it can be anything. It can be CAD, JPY, CAD, CHF. Everything will randomly go up. You can even see it here. See, this is the CAD CHF chart. It has been dialing up since the war is because US oil is going up and US oil and CAD are correlated. But again, what is GBP CAD? This is Reniti CAD. So if CAD XXX is correlated to oil, XXX CAD will be inversely correlated. So if oil is going up, XXX CAD will actually be inverse. So CAD will be fundamentally bearish. And now the use case XXX CAD is GBT CAD. So that's a simple breakdown on fundamentals as well on how you can incorporate fundamentals with technicals. But again, fundamentals is a very big part, and if you want a video on it, I can make a video on how you can trade into central bank divergences and all this. Again, that's kind of another story. But again, that's it for the video. I just gave you the on my entire trading strategy and how you can do the same. Again, this is again from Peace Horse right here because I just showed you the trade I've taken and it is almost a breaky. So let's say on Monday to get some kind of entry, you can still get a nice 1:1.5, 1:3 app. But I wouldn't suggest you to popping it randomly. I would suggest you to actually go on the higher time frames. Don't directly go to the lower time frames, but on the higher time frames. Try plotting this out yourself. Try backtesting it once on that you also have the confidence on executing something like this. And then you can slowly start in trading goods with some small capital, and then once it goes in your favor, once you understand the start, you probably scale up higher. So that's it for the video. If you like it, maybe subscribe, and I'll see you in the next one.